Good morning and welcome to the midweek edition of Business Morning on Channels Television. You're welcome. I'm Amy John Mekwa.
And I'm Laddie Williams. Thank you for joining us. Let's get the show started with some oil news. Now, oil prices fell today, taking a breather after a strong rally this week, spurred by the loss of a quarter of Mexico's production and signs that China, the world's biggest importer, has curbed a recent coronavirus outbreak. U.S. West Texas Intermediate crude futures fell 25 cents to $67.29 a barrel, while Brent crude futures dropped 22 cents to $70.85 a barrel. Both benchmark contracts rose by about 8% over the previous 2 days, erasing most of the slump from a 7-day losing streak. Prices mainly climbed because of the loss of more than 400,000 barrels per day of supply in Mexico after a fire on an oil platform. Demand in the United States, the world's biggest oil consumer, appears to be holding up well. Analysts were expecting crude stockpiles to fall by 2.7 million barrels and gasoline stocks to drop by 1.6 million barrels.
And back here in Nigeria, about 334.5 billion naira worth of inflows is expected to hit Nigeria's financial market today. That's according to latest report from the central bank. This will raise the system liquidity levels from 72.3 billion recorded on Friday last week to 406.8 billion naira. A breakdown of the inflows indicates that a total of 157.2 billion naira worth of maturing Nigerian treasury bills will also be rolled out over the CBN this week. Meanwhile, the treasury bills market closed Tuesday's trading session with bearish sentiment, with the average yield expanding to 4.8%. Elsewhere, the average yield at the open market operation segment remains unchanged at 6%.
And the Revenue Mobilization, Allocation and Fiscal Commission has announced plans to commence the process for a new revenue sharing formula for the federal, state and local governments. The chairman of the commission, Mr. Elias Mbam, explains that the new revenue sharing formula is expected to be implemented by the end of 2021. For the past 28 years, revenue for the federal, state and local government, as pegged by the commission, is put at 52.6%. 26.7% and 20.6% for federal, state and local governments, respectively. Do take a listen.
I want to reiterate that the Commission is highly determined to produce within the shortest possible time a new revenue sharing formula that will be fair, just and equitable to the three tiers of government. The Commission has programmed to complete this review process by the end of 2021. I am glad to observe that the response so far from Nigerians is very impressive and demonstrates the importance the general public attaches to the exercise. On this note, I call on the media and indeed all Nigerians to be part of this current exercise by making relevant inputs that will enrich the exercise and give their unalloyed support to the Commission to achieve its desired goal.
You're welcome back. Well, Plentywaka, a bus booking platform which provides interstate travel via its daily waka offering and interstate travel, since going live in September 2019, says that it has acquired over 80,000 users while completing up to 500,000 rides since they were featured here on Business Morning, and that was in March. But Plentywaka has really been busy. So we now have the Chief Executive Officer, Onyeka Akuma, joining us to update us on what Plentywaka has been doing. Good to have you, Mr. Akuma. Good morning.
Thank you. Thank you for having me.
Yeah, so since our last conversation here in March, how has business been?
It's been fantastic. I think from March, we were able to get into the Textiles Accelerator program. And that was something that allowed us to remodel our business a lot more effectively. We've been able to grow our numbers. Recently, we just said how we've gotten to a point where over 480,000 passengers have commuted using the Plentywaka app within the last 2 years. Between March and now, we've been able to remodel our business to have different kinds of waka, in the sense of moving people. And for the Waka, you have daily Waka, where people can now move from bus stops to bus stops using our app in a predictable and comfortable manner. To that end, we've concentrated heavily in Lagos. And then we also have Travel Waka. And with Travel Waka, it has allowed us to not just get people from one city to the other, but we're now aggregating several bus operators on our platform. So you have the likes of Geo, Libra, recently AFEX, ABC, Greener Line, and a couple of others that have now signed up on the Plentywaka platform to commute people using the mobile app to 24 cities across Nigeria. So it's really an exciting moment for us as we launched those two sets of services on Plentywaka. But more exciting has been the fact that we've been able to attract some very interesting investors into our business. Our headquarters now is in Toronto at the moment, and we've been able to attract some Canadian investors, US investors, Chinese investors, and Nigerian investors in the business in order to fuel the next chapter of our growth. And we're very lucky and we're fortunate that we're in a time and season where we can do this in our business. All 45 of us in the team are truly pumped up about what we can do with Plentywaka going forward.
Yeah, well, you actually sound pumped up too. We're happy for you too. Well, tell us more about the daily Waka, especially here in Lagos. So one of the things that Lagos is known for is the hustle and bustle, the traffic. How do you incorporate that into your app, and what considerations do you give to that?
Okay, so on Daily Waka, what we originally set out to do was people shouldn't have to move from one bus stop to the other in an unpredictable way. People shouldn't have to do it in a very uncomfortable. I should be able to bring out my laptop in the bus and work on my laptop and feel safe to do that. And so what we did with Daily Waka was we allowed our buses, so we got in brand new buses initially when we started, and we're able to commute people from bus stops to bus stops. It took us about 3 months to 6 months to get to 100,000 people moving with that service. In the last couple of months, we've gone into close to 400,000 people that have done that. And what we're now doing is unlocking the opportunity for individuals like you and I to now onboard our vehicles. So if I have a minivan, for instance, or I have a bus, I mean, not everybody has a bus that you use for personal purpose, but you may have a minivan, a Toyota Sienna, for instance. You're able to bring that vehicle on our platform and make a decent return from allowing people to move from bus stop to bus stop while earning as much as 250,000 naira on Plentywaka. You also have individuals that are now opening up their vehicles. So if I go to work in the morning and I drive with empty seats in my vehicle, I can now turn those seats open for people to now join me on that trip, and I'm making some money while still maintaining my normal route. To that end, we've been able to increase our fleet of vehicles. To that end, we've been able to get our customers excited about the locations we operate in. We're getting huge demand from people to say, hey, can you bring Plentywaka to this part of Lagos? Can you bring Plentywaka to that part of Lagos? Even corporates are now approaching us and saying, we don't want to have buses on our platform. We don't want to have buses in our organization. What we want to do is work with Plentywaka to provide a staff bus solution. And to that end, we created that corporate Waka service where people can now have their buses moving people across the city of Lagos and without necessarily owning those buses. And so that's how much we've done with Daily Waka. And we see that growth growing steadily. And we see a lot of people joining. We see a lot of people bringing their vehicles. I'm quite excited about where we find ourselves today.
Nice. I guess I need to start making money with my empty seats. Anyway, anyway, Starbus commenced operations in Ghana a month after Plentywaka's launch. What's your relationship with them?
In November 2019, Starbus launched, and what they did was, within that period, all of us had to go through the challenge of dealing with the pandemic, where we had to shut down for pretty much about 5 months of our businesses. Now, the Isidore, who was the CEO of Starbus, was keeping tabs with me as we were building Plentywaka in Nigeria. He was building Starbus. And we spoke for about 4 times within 2 years of him running Starbus. And then we had an opportunity where in April, around May of this year, May of 2021, Isidore approached me and said, hey, congratulations on getting into Techstars Toronto. Do you have plans for Ghana? I said, yes, I do. I mean, we had plans for Ghana to go into Ghana in Q4 of 2021. And so we're looking at the opportunity of how we could replicate our model in that country. And we're also going through a funding round. And so I told Isito that we're excited about Ghana, and if he had the opportunity to partner with us, let's go ahead. So that was how the conversation started. And over time, what we have successfully done is two main things. One, we've been able to raise our seed funding from a couple of investors. We've raised about $1.2 million in funding in our business in order to scale our operations. And we've used part of that funding to go ahead and acquire Starbucks in Ghana. Now, what you have with Starbucks is Starbucks becomes for us Plentywaka Ghana. And Isidore and his team have joined in Plentywaka Ghana to launch Plentywaka Ghana's operations from September 16th. They've already moved 100,000 Ghanaians within the 2 years period that he's been operating Starbucks. All those 100,000 people will join, continue to get the service they've been getting, but even better with the Plentywaka brand, with our technology, with our customer service, with our marketing approach. And so they will continue to ride on the platform. There are a couple of corporates that use Starbucks already in the country, and those corporates will continue to use the service. And so what we're excited about is Isidore and his team, formerly in Starbucks, will now launch for us Plentywaka Ghana on the 16th of September this year, when we become 2 years generally across the group, to get Ghanaians to move in a more comfortable, predictable, and reliable manner across the city of Accra. And so we're quite excited about that, and it's where we've channeled some of our energy in the last couple of months, while seeing how we continue to evolve in Nigeria and scale our operations. What that does for us eventually is, in the next 2 years, we want to replicate that model in 6 other African markets. We'll be going to 6 other African markets across West Africa and East Africa to scale our operations into those markets and get more people moving better, moving in a more comfortable way, moving in a predictable way right here in Africa. That's what we're doing with Starbucks now. That's what we've done with them. And that's what we'll continue to do as we continue to expand our operations, building the largest shared mobility platform on the continent.
And you also have raised a $1.2 million seed round to scale up operations. Give us the details of that.
Okay, so when we got into Techstars Toronto, one of the things we noticed was that to build a very successful mobility startup, one needed to focus on how you fuel growth, how you're able to attract the right kind of talent, how you're able to build the right kind of technology. To do all of that comes at a cost. And so what we were able to do was we were able to demo to about 200 investors. I had to pitch to over 60 of them individually. And then we're able to convince a couple of them to join us. So we had the exchange in Canada. It's a fund, $1 billion fund that will soon launch out of Canada. And Todd Finch, who is regarded as the father of the internet in Canada, led that round into Plentywaka. We had a couple of other investors like Techstars. Techstars did a follow-on investment from their previous investment in Plentywaka, did a follow-on investment in this seed round. We had SOSV, one of the most active VCs in the world, participate in the round. We had Shock Ventures, and then even locally in Nigeria, we had 2 major VCs, Argentile Capital Partners and ODBA, led by the very enigmatic Bite Odinei. And what we've gotten from them, along with a couple of angel investors, and we had angel investors in Nigeria, angel investors in the US, and angel investors in Canada. They've given us some fuel to continue to push on our vision. The goal was to get into Ghana, and that we've already achieved, launching by Q4 this year, like I mentioned. The goal was to grow the number of users on our apps. The goal was to engage more customers and give them better services on our platform and recruit brilliant people on the team, get excellent people on the team across marketing, across technology, across operations to continue to improve our service. What we intend doing is going back again into the market within the next 12 months to raise additional capital as we fuel our growth across the continent. Because with mobility, you've got to pay for technology, you've got to pay for the right kind of people, and we don't want to be stuck at any point without having the necessary capital to scale that particular vision that we have for ourselves.
Are you thinking of going public anytime soon?
I mean, it's a goal for every entrepreneur to get to a point where you can go public. I mean, so there are several forms of exit. We either consider going public, or we could either consider having a brilliant platform that has very strategic visions for transportation for Africans, look at maybe acquiring the business, or we just continue to grow to the point where we become profitable. And to those three ends, we've seen a lot of opportunities there. We already have one strategic partner that has invested in this particular round, but we can't disclose names yet. And that strategic partner is potentially looking at the African market, the narrative of commuting Africans, not just in Nigeria, within cities and between cities. And to that end, we see for ourselves the opportunity where ideally we get a very good, decent return for the investors that have invested in Plentywaka, believed in us up to this date. So whether we go public or whether we sell to a major, another bigger business that has the vision for transportation in Africa, and we're considering all options. But for now, our head is just there on the ground, and all we're looking at is growing our business. All we're looking at is getting more footprint. All we're looking at is creating the impact. We're also looking at creating heroes. We call our drivers heroes. And we call them heroes because they're saving people from the hassles of commuting in manners that are not conducive for them. They're also saving the environment from the emission of CO2. And where I have a vehicle, and rather than going with my vehicle and you going with your vehicle, you drop your own vehicle and you can hop on my own vehicle and reduce how much emission we have in the environment. That is why we call them heroes. Eventually, they become superheroes if they put in excellent customer service into what they are doing in Plentywaka. So to this end, this is where we are focused on how we continue to scale our operations, have more impact, get more heroes, continue to improve our service across the region.
Yeah, we're just happy that, making heroes also means reducing unemployment in the country. That is enough good news for us. So when are you looking to start your Series A?
There are a couple of investors already that have invested in this round that are potentially saying they want to do a follow-on. They're already seeing the impact of our work. They're already seeing how exciting what we're doing is going on. So they're excited about participating in our future round. We're looking at next year, early next year, we go back into the market to try to raise our Series A fund, whether it's Series A or pre-Series A, whatever it is, we want to raise additional capital by next year. So our goals tie around H1 next year. We'll go back into the market to do this. But in order to successfully do that, you've got to hit your KPIs. And that's why we're focused now not on the Series A. We're focused now on hitting our KPIs that we've promised that we will hit for our investors. We're already knocking some of them out. We want to see if we can push the timeline for our KPIs as against 12 months, push it to 9 months. For those in 9 months, we push it down to 6 months, hit those KPIs, and eventually go back to the market. It becomes easier talking with investors and in order to provide additional capital to scale what we've built in Plentywaka.
All right, before we let you go, what's the bigger picture for Plentywaka?
The bigger picture is this. We've successfully built a business that people said was going to be very challenging. So people said, in Plentywaka, how are you going to deal with the road operators? How are you going to be with those that regulate transportation? This was a journey that people said we will not succeed at. Partners said we will not succeed at. Investors outside said we will not succeed at. What we've been able to do is to crack that, is to show that, yes, we can put our hands to work and get some success out of it, and gotten some investors to believe in us. Now, taking it off from there, we've gotten the right set of people on the team, our technology team, our marketing team, our operations team. We want to continue to build on that and evolve on that. Moving on from that bit, we've been able to get the right kind of investors that believe in the vision to invest in our business, to allow us to go out and achieve the KPIs that we've set for ourselves. The next step for us is, one, we want to make sure that in all 24 cities in Nigeria, where the different bus operators we're working with have presence, people are able to use Plentywaka from Abuja and travel to Onitsha, and use Plentywaka from Onitsha and travel to Lagos. You're able to book on the mobile app, and instead of paying 5,000 naira for a ticket, you can pay as low as 4,000 naira or even 3,500 naira for a ticket to travel by bus within those cities. When we create that behavior in Nigeria, that excites us. Taking that forward, we scale this into Ghana like we've done, and we push on from there, and then we get into those 6 other African markets. That is in the immediate, the plan for Plentywaka.
All right, big plans, and we do wish you luck in your business. Thank you so much, Onyeka Kuma, CEO Plentywaka. Thank you.
Thank you very much. Thanks for having me.
All right, AFEX Commodities Market Update is next after the break. Do stay with us. This is Business Morning. And for AFEX Commodity Update, it's time to review another week ended for the week August 17th and 23rd. AFEX Commodity Market Summary components were all in the red. We have Michael Martins, Portfolio Manager at AFEX, with the details. Hello, Michael. Let's have it.
Hi, Ladi. Good morning. Thank you for having me once again. It's always a pleasure to be here. So just to give you a brief update of as regards to what happened on the exchange in the week under consideration, the total value of transactions traded on the exchange, as you can see in the table in front of you, fell by 92.42%. From 0.33 billion to close the trading week at 0.025 billion. The total number of contracts traded on the exchange also fell by 84.48%, from 6,986 contracts to close the trading week at 1,084 contracts. The total number of deals was also in the red, falling by 74.29%, from 35 deals to close the trading week at just 9 deals. The AFEX Commodities Index, which is the ACI, also fell by 0.17%, from 442.50 points to close the trading week at 441.77 points. The AFEX Export Index, which is the AEI, remained unchanged in the week under consideration, staying at 170.50 points. With regards to the volume of contracts traded on the exchange, there was a general decline in the volume of contracts traded on the exchange, with the only major change happening with maize, which traded from 392 contracts last week to trade 1,077 contracts in this week. With regards to the price changes on the exchange, we generally saw only grain with maize, which went up by 1.22%, gaining 294 naira in the contract value to close the trading week at 24,000 naira. With regards to the commodities that lost value in the week, the highest was paddy rice, which lost 5.15%, losing 1,195 naira in the contract value to close the trading week at 22,000 naira per contract, followed by sorghum, which lost 3.30%, losing 695 naira in the contract value to close the trading week at 20,340 naira per contract. And last but not least, with regards to price changes, we saw the price of soybean fall slightly by 0.03%, losing just 12 naira in the contract value, losing just 12 naira to close the trading week at 33,500 naira per contract. And as we always say, if you want to know more about the commodities market, you can always go to our website, which is www.afexnigeria.com. And if you want to get started trading commodities, you can download our app, which is available on iOS and Android.
Just wondering, the harvest season is upon us. What impact is it having on activities on the AFEX Commodities Exchange?
Thank you very much, Ini, for that question. As you have seen, with a lot of the commodities market update that we have done in recent weeks, there have been very few price changes across board. With regards to also volume too, you would notice that the volume that has been traded on the exchange has fallen significantly in the recent weeks. And also, like I said, with regards to price changes don't really occur that frequently. And you would notice that for this week's price update, we only generally saw price changes with regards to grains. All the other export commodities saw little to no change at all. And I think that's also largely indicative of what is going on in the general commodities market at large, which is to say, we are not necessarily having as much trading activity in the commodities market as we generally do have, during the months of harvest and then, the subsequent months after that.
All right, Michael, thank you so much. Well, we have to switch a little bit now, because following the theme for this year's Feed Nigeria Summit, which is targeted at resuscitating the country's disrupted food system after the COVID pandemic, one of the ways that have been identified is through strategic partnership. The question becomes, how can we make building and strengthening Nigeria's food systems a collective responsibility, especially with the effect of the pandemic on food production? Well, we have yet from AFEX, the investments manager, Mr. Yusuf Ogumbi, joining us now to answer this question and a whole lot more. Good to have you, Mr. Ogumbi. It's been a while. Good to have you back.
Good morning, Ini. It's nice to be here.
Yeah. So with every sector of the economy adjusting to the new realities, what strategic measures can we put in place in the agricultural sector to resuscitate or rebuild the country's food system?
Thank you. So COVID-19 taught us a number of lessons in the agriculture sector, and one of them is that we need to be quite innovative about our business models. companies, farmers, processors, everybody operating in this space have to be innovative and creative about how they approach this sector. One thing we've seen so far is the concentration and a lot of efforts being put in smallholder farming, aggregation of smallholder farmers and the likes. But then we begin to see new blue ocean opportunities here and there, and we think that's where we need to go to now. We are beginning to max out some of the opportunities in the smallholder aggregation, smallholder business models, and it might begin to pay some, we might need to start paying attention to other opportunities in this space. And I think this might be some of the new realities we need to adjust to. Not to say that we need to abandon smallholder farming in any way, no. What we are just saying is we need to innovate around that part and then also innovate in other sections of the sector as well, so that we max out the potential that the sector provides.
Into picture of some of these opportunities.
Yeah, so one way of boosting agriculture is the way we've seen so far in the last 4 to 5 years, bringing together smallholder farmers, extending finance to them, providing market access, providing extension services to these farmers. But another way we see that we can also boost production and achieve the core mandate of food security is also trying to develop commercial farms across the country. And we might be innovative around that as well. You typically expect your commercial farms to be 2,000 hectares and the likes, but then we can decide to say, because we have some challenges tied to this agriculture, say for instance unemployment and the likes, we can decide to be innovative around that and say, rather than having such a huge chunk of land, 2,000 hectares in some places, we can break that down into pieces, bits and pieces, and have youths come across, youths, women and people in agriculture take some portions of this land and do something we call in-grower schemes across the country. So these are some other opportunities that we are beginning to see, in-grower schemes, commercial farms being set up across the country, especially within the context of the staple crop processing zones. We begin to see these opportunities as well, in addition to the smallholder farmer aggregation models that we've also seen so far.
Well, does this cover the challenges of insecurity, access, road access, infrastructure? How do you hope to handle that? I mean, even when you talk about the smallholder setting, you talk about funding. Now, if you want to make it even bigger, then you're talking about more funding. Where is it going to come from? Who is going to give them security and access to this land that you're talking about?
So this brings in the importance of collaboration, cooperation across a wide spectrum. So you mentioned funding, you mentioned infrastructure, road access and the likes. And all off the top of my head, I can already point out the government, I can already point out the banks, I can already point out the asset managers across the country. You see, the gist is, the opportunities in this space are huge enough, and if we're able to bring in the right partners, we can get this thing off the ground. If you look at the success story we saw in Brazil, for instance, we saw how Brazil was able to launch the agriculture in Brazil, so much so that Brazil is practically the food basket of the world today. And Nigeria has the capacity to become something like that as well. Brazil created a policy around such that the government provided the right incentive, and then a lot of investors came into Brazil, and then they opened up the country massively. Today, Brazil is the biggest exporter of soybeans and one of the largest exporters of maize as well in the world. And this is the kind of success we can replicate in Nigeria. We can have partnerships with the government, with focusing on key problems. So road access is one, another one is insecurity, and we can also focus on problems of access to finance. So we design structures around this, and this is one of the benefits of the exchange as well. We see how these people can come together and provide immense benefit to the sector, and that's how we think that collaboration can work. So the private sector, whether it's from the technical partners, the private sector, whether it's from the companies that provide finance, the financial institutions, the government, whether it's the regulators or the government itself in terms of infrastructure provision, I think all of these work hand in hand in how we can get this thing off the ground.
All right. Although the government have made, laudable efforts and measures to improve the food system, the impact is still curtailed by, challenges that continuously result in low productivity, price variations, and unfavorable trade realities in the sector. What do you think private players like AFEX can do to make things better?
So private players like AFEX, and fantastic efforts made by the government so far in terms of the interventions they provided in the sector. And we see the government as the kickstarter, more or less the person that kickstarts all these engagements, kickstarts all these developments. But the private sector has a long way to go in this kind of venture. It has a lot of opportunities to bring in and a lot of resources to bring in into this kind of venture. So for AFEX, exchanges like ourselves, AFEX Commodities Exchange, are set up to solve problems. You think about the first forward contracts and the futures contracts that were developed. They were made to solve real-life problems. And in our case, that's what we think. If the private sector can be incentivized in the right way, leveraging on some of the products that we have seen being implemented successfully, we think the private sector can and will come into this sector. For instance, we mentioned last year that we were able to raise about 25 billion naira in terms for processors. This money was largely provided by the private sector. And we saw how we were able to design the products innovatively to bring them into this space. One other thing very recently mentioned, like Ini mentioned, the Feed Nigeria Summit, we signed an MOU with SWACO, Southwest Agricultural Company, and then the Ogun State government. And this is based on the understanding that the private sector has a long way to go with the support of the government. So SWACO in that case is going to be a consortium lead, more or less, leveraging on products on the exchange, products provided by AFEX Commodities Exchange. And we think if we are able to leverage on these products, the staple crop processing zones that we've always talked about, implemented in some way, shape, or form, can actually get off the ground very well. And at the end of the day, the private sector is bringing the efficiency in resource allocation, is bringing the efficiency, the significant human resource they have, and the focus on value creation that the private sector provides. And we think that's how we can boost what the government has done and get to where we all want to get to.
All right, thank you. We'll have to leave it there now. Yusuf Ogumbe is investment manager with AFEX. Thank you so much for your time on Business Morning.
Thank you very much.
Moving on to the markets now. The equities is about after a break. We'll head on to the markets. Do stay with us. I will see the equities market is back in the green. Will has the details.
Morning, laddie. Oh, yes. Let's celebrate the big wins. It was a moderate rebound for the equities market as it was able to reverse the previous day's session's loss following investors' interest in GTCO, Dangote Cement, and Lafarge. The all-share index inched higher by 0.07% to 39,460.68 points, and the month-to-date gain has increased to about 2.4%. Speaking of gains, the NGX Group is celebrating 60 years of enabling Africa's largest economy as a leading integrated market infrastructure group on the continent. Well, let's look at the activity chart. We see that volume was down, value was also down, deals was also down. But to give us more insight, we have Tajuddin Olanyinka, a fixed income dealer, a stockbroker at Valmont Securities Limited. Good morning, Tajuddin.
Yeah, good morning.
Good morning, Ty. Let me start by saying congratulations on the NGX's 60th anniversary. What are your thoughts on that?
It's a good development. Everybody's happy about that. I think has been around for quite a while, so it's just a good thing. That a thing is still there and providing the requisite services that is expected of it. So we're happy about that, and I think it's a good thing for all the stockbrokers and the entire investing community.
Okay, great. Now, let's move back to the market and see what the activity has been there. There's been a lot of swings. It's been choppy in the market. Would you say investors are being cautious?
I want to say that yes, they are being cautious because of you know, when there is a persistent volatility arising from also, you know, liquidity challenge, investors tend to exercise caution, especially when right information about the market is not yet handy. You know, we still have issues around the, FS policy, government policies, and you know, fiscal stabilization policy of government. So when you have all those things that are supposed to spur investors' interest, and that those things are not there, of course, you expect market to hibernate sometime and then, you know, come back to life. So exactly what we are seeing right now is the dominance of speculators over the actual investors in the market. They are the ones moving the market the direction of, you know, you are seeing it. Either it's going up or it's coming down. It's just the dominance of speculators, because the key insurance investors are not paying the market. The foreign insurance investors, that is foreign control investors, are also not back yet. So we have absence of the liquidity providers, you know, to guide and support liquidity in the market, so that investors' confidence can bounce back, and then we can reduce volatility. But that is not, you know, taking place right now. So that's why you are seeing what is going on. But on the average, market will still provide semblance of that stability, even though the volumes are small, values are so small. But we still see semblance of a balanced market.
Thank you so much, Tajuddin, for that input. That's Tajuddin Olayinka, stockbroker at Valmont Securities Limited. Now, to the unlisted markets, we see that the market cap and the index was down by 0.02% to 736.28 points, and the market cap was at 639.95 billion naira. The volume was also down. Volume was up 5.73 million units, and the value was at 98.01 million naira, all traded in 23 deals. Over to the fixed income markets, where we see that the bullish sentiments continue there. Volume of trades, but there was still mixed sentiments for investors in yesterday's session. Buyers were mostly observed at the short to mid papers, and participants are probably trying to take advantage of the sales, of the advantage of the profits that have been of higher yields in some parts of the day, and so they're really doing some buys there. And we move over to the NTB, the Treasury bills market, where sell-offs persisted in yesterday's session as industry liquidity tightened. Longer tenor maturities, bills maturing in May, as well as the CBN special bills, were the preferred bills traded by market players yesterday. Meanwhile, there'll be a Treasury bill primary auction tomorrow, where the DMO is scheduled to offer 157.21 billion naira across the 91, 182, and 364-day maturities. Elsewhere, the average yield of the OMO market, the segment, was at 6%, remains unchanged at 6%. We take, we're seeing that things in the markets are just moving slowly because investors are being cautious, like our guest has said. Within this fixed income space, that the yield continue to drop. We're hoping that there'll be changes soon, but we'll wait for that magic to happen. Ladi, what do you think?
All right, Will, let's see how today's trading session ends at the equities market. I'm hoping for green anyway. Thank you, Will. All right, we'll take a break now. When we come back, we'll do an opening call to London. Do stay with us.
You're welcome back. Well, let's head to London now. Good morning, Juliana. Good to have you again today.
Good morning, Ine.
Yeah, so businesses have been given more time to apply new product safety marking. Tell us more about this UK conformity assessed marking.
Yeah, well, the UK conformity assessment mark replaces the EU CE mark, and basically what it is it's a stamp to confirm that thousands, in fact tens of thousands of products are adhering to British standards. So these are products that are not only sold within the UK, but most importantly for this mark, it's for products that are exported onto the continent. Now, as with lots of things, lots of businesses have been complaining that even though though there was a one-year Brexit transition period, there just isn't enough time. And so prior to today's announcement, a number of trade bodies had written to the British government basically saying that not only was it costing too much for some products like radiators and electrical goods, it was costing up to £50,000 a product to make sure that it is tested and does adhere to these standards. The backlog was just too much, and the paperwork and the bureaucracy. The government have listened, and today they did release an announcement saying that the UKCA mark now is not applicable until January 2023. So businesses have another 18 months or so to make sure they get all their paperwork done. This is also really good news for EU suppliers to the British market, because they, of course, were also struggling with these new rules, and it was actually stopping exports from coming in. So good news for businesses who were struggling with that paperwork.
Yeah, but not very good news in the supply chain. The crisis seems to be persisting, and now it has to do with staff and transportation disruption.
Yeah, this is an ongoing discussion today. The news comes from the Confederation of British Industry. They were picking up on information we got yesterday about the retail sector. Surveys show that stock levels are at their lowest since 1983. And this is because of various reasons. One is obviously the global supply chain. That's not just a British issue, it's a global issue. But Brexit has compounded these issues. Lots of workers who are seasonal workers who would come to the UK to work and go back home have really struggled over these tightening of migration rules. Also, as well, another word that's not going to die yet, pingdemic. Pingdemic is still causing lots of trouble. I was mentioning this to Laddie yesterday. I think it was you, actually, Inni, yesterday, about pingdemic and staff levels. Retail, very well known for recruiting lots of young people. Vaccine hesitancy amongst young people in the UK still very, very high. And if you are getting pinged saying you've been in contact with somebody that has COVID-19, you have to isolate, therefore you cannot work. Also, as well, the Road Haulage Association, Logistics UK, they've written to the Business Secretary Kwasi Kwarteng saying that there's a shortage of about 90,000 haulage workers. So much so that yesterday we were reporting that McDonald's ran out of milkshakes and bottled drinks. They're no longer able to sell bottled drinks. Milkshakes may be funny, water isn't. Nando's last week had to shut 45 of their restaurants because they were struggling to get chicken. So this is a massive issue. Some of the headlines are quite funny, others pretty serious. We know today that also a lot of employers are offering bonuses, some of them actually up to £10,000 if they can get people to join their forces. So big issue, especially as we are coming up to, dare I say it, Christmas, where things are going to get busy. So hopefully the government will be able to sort this out sharpish.
I know you can help. You just have to mention Christmas, Juliana. All right, well, thank you so much.
After you, though.
All right, then we'll talk later at 1:30 during Business Incorporated.
Thank you.
So let's take a peep into the crypto market now. And I heard from a little bird that the pullback is persisting.
Yes.
Laddie, tell me that's not true.
Well, Bitcoin failed to gather strength above 50,000, and we've had that pullback. It was trading at $48,000 this morning, and major altcoins are in the red. Ethereum still above $3,000, but all in the red. You know, when Bitcoin has that major pullback, you would see double-digit losses in altcoins as usual. Market cap at 8 a.m. was about $2.08 trillion, up about 3.29%, but it's nearing the $2 trillion mark now to go below it at this hour. 24-hour volume, $115.89 billion, up about 2.51%. Bitcoin dominance, 43.75%. And we have 24-hour volume traded in Bitcoin, $31,099 billion traded in at 8 a.m. this morning. And we did have that, looking at the 4-hour chart there, we had that MACD bearish cross, took the price below the simple moving average down to about $47,000. It's not yet oversold on the RSI. RSI is still above 40 points. So we might see a rebound at some point. Price of Ethereum $3,213. It's down about 3.96%. 24-hour volume for Ethereum this morning, $18.92 billion traded. So the market right now is quite volatile. So this might be a time to enter maybe a stable coin, but you don't want to also miss out on gains that might come if you're in a stable coin. So the choice is actually yours to make. Let's bring in Solomon Amunde now. Hello, Solomon. Great to have you.
Yeah, good morning.
Good morning. So Bitcoin broke above 50K, but has failed to hold above that level and actually broken the resistance of about $47,600. What should we expect next?
Yeah, we should expect correction, which has started since yesterday. We saw the rejection at 50,000 based on the chart. Bitcoin was highly oversold already, or overbought rather. It was overbought, and the relative strength index showed that we would expect a brief correction, and which started mid yesterday. So we should expect some correction to 46,000.
Okay, so we've seen a couple of altcoins hit all-time highs, like Cardano hitting about $2.92. What other altcoin do you see, hitting a new all-time high?
Yeah, I believe currently the altcoin or the project everyone should be looking at right now, which has so far outperformed Bitcoin, Solana, and even Cardano and Matic since the bounce, is Avalanche. Because we have seen Avalanche within the last 30 days that's done over 4x, which has made it outperform both Solana, Bitcoin, Cardano, Ethereum, like almost all the assets. And it's still aiming to go high, so we should expect it to still do over 2x from its current price. So I would say Avalanche, we should expect Avalanche to do way better than other crypto assets currently.
Okay, so should traders be in stable coins at this point, with this pullback?
I would say if anyone wanted to move to stablecoin, it should have been yesterday or early this morning. Right now, the correction is almost over. We should bounce at 46K, or should we to bounce at 6K, then 42K is the strongest support. If we lose that, then we are going short-term bearish again.
All right, the guys will be watching all the support. All right, thank you so much, Solomon.
All right.
All right, moving on now. See AFEN, my coin to watch, trading at 1 cent, market cap about $1.32 million. This one has been trading at 1 cent for a while now, but I'm expecting at some point it's going to get into bullish territory. The thing about this market is, if you want to make money in this market, buy when no one is talking about it, then sell when there's so much chatter on social media. That's one way to make profit in the crypto market. Top odds by market cap, it's all red this morning, with Dogecoin being the biggest loser there at 29 cents, down about 6.93%. BNB is also below the $500 mark at down 0.91%. So it's quite emotional market right now.
Emotional. One thing that came to my mind when Solomon was talking is the best time to start an investment or do anything good is actually yesterday. Right. He said if you want to start now, it's actually kind of late.
Kind of late, yeah.
Well, I guess it's when your day starts, that's when you get into whatever you want to do.
Exactly.
Anyway, that's it on the program today. Thank you so much for watching. I'm Ini John Mekwa. Do remember to join us at 1:30 p.m. Business Incorporated will be up at that time, and we'll have interesting stories for you from the world of business.
Thank you for watching. I'm Ladi Williams. Bye for now.